One of the most common problems that new business owners face is choosing between a sole proprietorship and an LLC. Today, we're deep diving into the nitty-gritty of both of these options to help you make an informed decision for your business. Whether you're just starting out or considering a switch, this is a video you won't want to miss. So let's get started. Alright, let's kick things off by going over the basics. First up is a sole proprietorship. This is the simplest business structure, and it essentially means that there's no legal distinction between you and your business. Next, we have the Limited Liability Company, or LLC for short. This business structure protects you from personal liability, meaning that your personal assets are safe if your business runs into financial trouble. Now, it's important to mention that there are two types of LLCs, single member and multi-member LLCs. Single member LLCs have only one owner, and similar to a sole proprietorship, profits and losses are reported on the owner's personal tax return. On the other hand, multi-member LLCs have two or more owners, multi-members. The profits and losses are distributed amongst the members. Both of these structures have their benefits and challenges. Let's break them down category by category. All right, with a sole proprietorship, things are pretty straightforward. All you really need is your social security number and any permits associated with your specific business. On the flip side, forming an LLC requires more documentation. Apart from registering your business with your state, you also need to get an employer identification number from the IRS. One of the most important differences between the two comes down to taxes. Both structures can fall under what's called pass-through taxation, which means a business's income is taxed at the same rate as the owner's personal income tax. But with LLCs, there can be more flexibility. Instead of being taxed at the self-employment tax rate, you can choose a corporate tax rate, which will save you a lot of money in the long run. We go more into detail about this in our blog explaining what an LLC is. A sole proprietorship is as straightforward as it gets. One owner, one decision maker. It's that simple. LLCs, however, can vary. If it's a multi-member LLC, those multi-members might have shared control, or they might delegate all decisions to a single manager. This is something the primary members of your business will need to agree upon before moving forward. You can find all of these guidelines in your LLC's operating agreement. Finally, let's talk finances. Running a sole proprietorship is generally more affordable. You have minimal formation costs that don't include ongoing fees and complex documentation. However, with LLCs, there is a bit more financial load involved up front. Beyond the obvious costs like filing fees for your articles of organization, there are indirect costs too. And think about all the time spent getting an EIN, drafting an operating agreement, holding meetings, and submitting annual reports. And speaking of filing fees, they can range from as little as $50 to a couple of $100, depending on your state. Still, getting an LLC can be well worth it in the future due to the tax and liability benefits. How do you figure out which one to pick? Well, let's break down the pros and cons of both to decide. First up, sole proprietorship. The advantages that come with this kind of business all have to do with simplicity. If you want to set up your business fast without much capital, sole proprietorship is for you. Sole proprietorships typically involve minimal paperwork and formalities compared to other business structures like corporations or LLCs. There are no startup fees to register your business. You also have complete control over every aspect of your business, and your income and losses are reported on your personal income tax, making tax season a little simpler. But as a sole proprietor, you're personally responsible for all business debts and liabilities. So if your business faces a lawsuit, your assets could be at risk. Your growth is also limited as you'll be running a business without backup investors or partnerships. Outside investors don't typically invest in sole proprietorships due to the higher risk and lack of ownership stake in the business. Members of an LLC, on the other hand, aren't personally responsible for their business debts and liabilities. Your personal assets are generally protected, and you'll also have the option to be taxed under a corporate rate, which can save you a lot of money. Not to mention, an LLC appears more professional to potential clients and investors, but LLCs involve more paperwork and potentially higher initial expenses compared to sole proprietorship. Annual reports, operating agreements, and other regulatory demands can be time-consuming, especially if your plate is full with other parts of your business. On top of that, you'll want to check with your state to see if you need to pay a higher self-employment tax rate. The self-employment tax rate could be different for those operating a single member or multi-member LLC. So, you've weighed the pros and cons and decided that an LLC is the right fit for your business. Congratulations! Now, let's go over how to establish your LLC. Step 1. Choose a name for your LLC. Your business name should be unique. you'll want to check with your state's business registry to make sure your name is available. You can find this information on your state's government website. It ends with .gov. Step 2. File Articles of Organization. This is a document that you'll need to file with your state's business registration office. It typically includes your business name, address, and the names of the members of your LLC. Next, you'll create an operating agreement. Your operating agreement outlines the roles, responsibilities, and operating procedures of your LLC. Think of it as the guidelines for how your LLC will run, or an agreement on how you'll be operating. Lastly, you'll need to get an EIN number from the IRS. You can do this on the IRS website, irs.gov. Starting an LLC may seem like a lot of work, but breaking it down step by step makes the process more manageable. As we've discussed, sole proprietorships don't take much to get started. At the bare minimum, you'll need a business name and a social security number. Depending on your state, you might also need to obtain other documents such as a business license, specific permits, and zoning clearance. All of this information will be available on your state's government site, so be sure to look into it. And that wraps up our deep dive into sole proprietorships versus LLCs. If you still have questions about which structure is better for your business, leave a comment below, or you can check out our blog in the description. And as always, if you enjoyed this video, don't forget to like, comment, share, and subscribe. Until next time, happy processing. From the IRS. Also, all right, let's crush this out. That's pretty annoying. What are you guys gonna be for Halloween?
Okay, we're done.
All right, that's it. Not bad at all, right?